Quick test 1, 2. I think we got the sound up and running. Speechless. Raj says I'm speechless. Raj, if you know me, maybe you do, maybe you don't. You know I'm very rarely ever speechless. But you're right. You're right. For that brief moment, I didn't have anything coming through my microphone, but we should be good now. So if you can hear me okay and everything is working, then we are cooking with gas. All right, good. Thank you. Hey, Steve. Nice to see you, my friend. R. Franklin, good for you. All right. Got it all worked out. I like to say technology, we can't live with it, and sometimes we can't beat it, right? But we got it all sorted out. My name is Daniel, and Happy New Year from VantagePoint. I'm with VantagePoint AI, and today's session, we're going to explore some things as the new year started that I think you're really going to find a lot of value in. We're going to do some analysis on some of the most actively traded stocks currently, the stocks that I've gotten the most questions about or been asked to do the most analysis on. So we're going to walk through our artificial intelligence analysis here, and I use the VantagePoint software. That's where I'll be doing all of my analysis today. But today, seeing as we kicked off a new year, I'm going to bring a little bit of some seasonal information to today's conversation to let you know which of these stocks are expected to gain the most seasonally based on the seasonal information that I utilize here at VantagePoint, and what time of year you can expect the strongest move and how much that move could potentially be. So stay tuned for the entire session, and we will walk through all of those details step by step. And by the way, before we dive in, if you haven't already subscribed to the VantagePoint AI channel on YouTube, just hit the subscribe button. We do these live sessions every couple of weeks, and we dig into a lot of different information from the VantagePoint AI software to specific analysis on things you're interested in, like today's seasonal. For instance, we'll dig into the Magnificent Seven and any type of topic that is current and relevant and you can benefit from some artificial intelligence analysis. So if you haven't already subscribed, do me a favor and subscribe, and let's dive in. Now, one of the stocks that I'm getting the most questions about is Broadcom, AVGO. You can see it on the screen right over my shoulder, and you can see that there's several indicators on here that I'm going to walk through in today's session. Now, if you're a VantagePoint family member or a VantagePoint user, we call our users family members because we are family owned and operated, and we have been since 1979, and we feel like we have a duty to the people that utilize our software just like we would a family member. So if you're on today's session and you're part of the VantagePoint family, I see a couple of names already that I recognize, but go right into the chat and let me know that you're here so that I can see that you're using the software and you're part of the group already. And if you're not, that's okay. Let me know that as well. I love to see the mix of different people we have in our YouTube live, and that'll also help me adjust the delivery of the information. I don't want to leave anybody behind, but at the same time, I don't want to go so slowly that people that are utilizing this analysis are like, Daniel, pick it up. Let's get this thing going, right? It's a balance, a delicate balance that I try to keep throughout this session. Hey, Raj Akina, nice to see you. Steve, or Franklin, yep, yes you are. Good, part of the VantagePoint family. And for all of you traders, while you're going into the chat and getting into the conversation, for all of you traders that are out there, hopefully you're ready to have the best trading year you have had so far in 2025. And I always like to ask people, if this is going to be your best trading year, what are you going to do differently? What are you going to do better? And that's what we're going to be digging into today. Hey, special guest, guys. Special announcement. We do have a family member in the room. Lane Mendelson is here, our president. Hey, Lane, thanks for jumping in. Always love when you're on this session. We've got a lot of VantagePoint users here and really enjoying the software as we all are. So thank you for being here, to all our family members and everybody that's in the room. Let's dive in. Let's do some analysis, all right? So we're looking at Broadcom, and you can see VantagePoint had a very clear forecast on Broadcom on 12/2. For those of you that do not have the software, let me explain what I mean by a very clear forecast. What we're utilizing are predictive artificial intelligence indicators. So when they provide an indication, and I've got my pen, my handy dandy pen over here, when they provide an indication of a potential trend change, we have an accuracy using our indicators up to 87.4% of the time. That information is accurate information. It comes out every single day. So for those of you that are interested in making 2025 your best year, ask yourself the question, would being correct 87.4% of the time that a trend is expected to start going up make your year better or worse? I think you know the answer to that, but if you're not asking yourself and you're not looking for a way to get an edge, here's your sign, right? So when we look at this, what we get is a crossover where the blue predicted moving average, this is a predictive indicator in the software that indicates the trend. And when that trend prediction changes from a bearish prediction where the shaded area is red into a bullish prediction where it turns green, and there's a clear crossover right here on the screen, that date is saying starting on 12/2. After 12/2, we're expecting this trend to go up over the next few days. That's the first indication I'm looking for, and on AVGO, we got that there on 12/2. We also got the neural index saying that there was bullish strength expected in that trend. Prices were expected to be stronger because it was green. So I've got a trend prediction saying bullish. I've got a strength prediction saying bullish, and I have momentum indicators down here at the bottom. I have 3 momentum indicators saying that the trend was expected to start moving higher, and momentum was building over the next one. This is a 1-day predicted trend, the light blue line. The hot pink line is a 2-day predicted momentum, and the long term is a 3-day predicted momentum. And what this is telling us is that on that day, AVGO was an all-out go, go, go from the artificial intelligence, right? That's the software saying, based on the intermarket analysis, based on that patented global analysis, AVGO is expected to start trending up. Well, you can see the next day it went up and prices were higher the day after that. Prices kept on going up. Now, nothing goes straight up. There's always down days and up trends. But it's very clear at that point, at that crossover, that there was a really great trend expected and received right up to this highest point. I can check to see if that was a 52-week high, but that is a 52% gain in 10 trading days, right? And you can see 500 shares. Heck, we'll kick that back to 100 shares or one options contract. Hypothetical gain here is $8,577. That, my friends, can change your results for the entire year. Well, as that blue line stays above the black line, that is the software saying this trend still has the potential to keep going. Well, we can see that there was some clear resistance created up here and then another resistance level created here saying there is some major downward pressure on Broadcom. And the blue line, the predicted trend indicator, started going sideways after that second point. And we can see prices started going sideways after that prediction as well, right up until last night at the close where we saw that blue line come down and cross that other gray line, which is not a predicted line. And that's the point at which VantagePoint indicates, you know what? You can lock in your profits, take your 45% and go, because there is some consolidation or concern around this trend. Now, let me show you something that is a momentum trading hack, if you will. This is something for you momentum traders that know that when momentum builds in a bullish trend, it could really push things like here. Look, let me show you an example. Momentum was building, 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 and look what happened. Boom, push prices really quick, really high to that 52% high. But what happened after that? What happened after that day? Momentum started to turn the other way. Just like when you're in your car and you're driving and you take your foot off of the gas as you approach a stop sign, but don't hit the brake yet, you're still going forward, but with not as much velocity. There's a little bit of shift, right? That's what's happened, and when you have predicted momentum indicators, you can see that shift very quickly. The 1-day momentum indicator right there after 1 day said, hey, woo, we got some concerns. After 2-3 days, a 2 and the 3-day momentum indicator said, hey, momentum has shifted. Well, I can use that information to say, well, if momentum is creating lower highs, and for those of you that are new to trading, what I mean by lower highs is if I connect this high point to this high point to this one, I can see that momentum is peeling off of that. When I say a high point, look, this is a peak and this is a peak. Connect those two, and that line is pointed down, very clearly saying momentum is creating lower highs and pulling off. Well, guess what? I have that with the pink line, I have that with the navy blue line, I have that with the light blue line. Very clearly after this high point, we could see momentum peeling off. For you swing traders, that could be enough to lock in those gains, right? I'm not talking about the investors that are saying long-term, I want to be an AVGO because I like the company or I like the stock. I'm talking about for those short-term swing traders. When you take a second and you say, as a short-term swing trader, 52% in 10 trading days, that's blowing any of your targets out of the water because that is the underlying asset, right? The option move on that's like 150, 200% in 10 days. With momentum peeling off like that, you got to start protecting your downside and make sure that you lock in as much as possible from a profit standpoint. But if you're using the VantagePoint indicators, you're simply looking for that blue line to cross. If you want to oversimplify your trading, then great. I want you to. When the blue line crosses north, you've got a bullish trend. When the blue line is crossing or coming down and crossing south, you got a bearish trend expectation. And with AVGO, you can see that there's a very profitable move. Call it 40%, call it 50%. From an educational standpoint, you can see how the AI picked up on that move before it took off. Now, a lot of traders want to know, what does it say right now? And that's why we're here. I want to do some analysis right now about this. Look on the right-hand side of the chart. The right-hand side of the chart, we've got a blue line on top of the black line, call it gray line or crossing, whatever you want to call it. But we also have an inside bar. Now, this line over here, this candle right here that I'm highlighting and circling, this is what VantagePoint is predicting for the next trade day, right? Is it 100% accurate? No. But think about that. If you have the predicted high and the predicted low for the next trade day, and that predicted high is not expected to be higher than the previous day's high, right? And momentum is peeling off. Let me ask you, go to the chat box right now. If I said, without showing you any chart, that on Monday at 6:30 p.m., Tuesday's high is expected to be lower than Monday's high, and momentum has been bearish and turned bearish 3 weeks ago on Broadcom. Would you say that is a capital preservation move, a loss mitigation move, or would you say that thing's about to rally? Go to the chat right now, pick one of those, right? Capital preservation, loss mitigation, or bullish rally. If I called you up and I said momentum has been leaving and projected to leave Broadcom over the last 2 to 3 weeks, and the next day's high is expected to be lower, what say you? And again, this is an educational thing. I'm not providing trading advice. This is purely education, and I want to make sure that everybody walks away with some kind of information golden nugget that you can utilize to help you be more successful in the future, which requires a little bit of interaction, right? So don't be afraid. There is no wrong answer. Every trader's decisions are based on their trade style, their trade plan, right? You build the plan, you trade the plan. But as your trade plan, if I called you up and said momentum has been leaving AVGO for 2 to 3 weeks and is projected to have a lower high the next day, what does that mean to you? Armand says loss mitigation, all right? Akina says capital preservation mode. Okay, good, I appreciate that. I like the way you guys are thinking. That's important to understand, is that there's different things to think about when you're managing positions. Am I looking for profits? Am I looking to lock in some gains? Or I'm looking just to not lose, right? And that's what I'm talking about here. M is saying that there's a run, expecting a bullish run based on the fact that momentum is expected to be bearish and we're expecting a lower high. M, that's a risky maneuver, right? Now, don't get me wrong. Predicted technical analysis is extremely valuable, but you still have to apply it to your trade style. If your trade style says that momentum is bearish and we're expecting lower highs, means I'm buying it, well, that's up to you. But at the end of the day, what this is making me think is that there is some bearishness expected in AVGO, enough that locking in and doing some capital preservation or loss mitigation at the point of a 42% hypothetical gain here is not a bad idea. Not a trading advice, but that's my perspective when I look at this predictive information. The predicted low is higher, which means, so somebody said in the comments, Steve said, but the P low is higher. Yep, which is an inside bar. Can anybody tell me what an inside bar signifies when you're looking at technical analysis? And Steve, I know you know the answer to this. You're testing me. I know you. I know Steve well, and I know he likes to test me a little bit. That predicted low being higher generates an inside bar, which indicates consolidation and indecision around this bullish trend. So let's take it a step further. Oh, there you go, M. M says, I mean run as in get out. I read it wrong. Thank you for fixing that. Jeff says, at the very least, tighten stops. And Steve, thank you for the test, my friend. An inside bar is indecision. Indecision after a 42% gain is enough for me to think, okay, I'm good to go. And some of you may not know my personal expectation or view on the markets is, look, you got to twist my arm to put hard-earned capital into a position, but you just got to whisper to lock in gains because you're never going to lose money taking a gain, right? Good. All right. So we're all on the same page. Thank you for the interaction. Burl says consolidation. I love it. I love it. This is exactly the kind of interaction I was looking for. So what we're saying about AVGO based on the artificial intelligence is that there's trouble in their waters. And for the traders, not necessarily the investors, but for the traders, got to be keeping an eye on capital preservation here. For you investors, let's put on the triple cross and see what the triple cross says, because a triple cross is a predictive indicator in the VantagePoint software that can give me some dynamic support and resistance. And why I call it the triple cross is there are 1, 2, 3 predicted moving averages in this analysis. And as long as price stays above that really thick, fat blue line, that tells me that there is still some potential bullishness left in this. So as an investor who's not looking to take some profits off of the quick trends, there's still some hope from an investment standpoint. But the question is, at what risk? And as a trader, that's where I say you just got to whisper to help me understand when the end of that could be near, and that's what I'm looking at. All right, so I promised you some seasonal information on some of these biggest movers. Let me give you this, and if you've got your pen ready or your notepad or whatever the case is, this is based off of 13 years of data on Broadcom. Over a 13-year period, Broadcom has approximately about a 30%, 36% move annually from January, call it 2nd, to December 31st, about a 36% move. The strongest part of that move starts on October 30th, and it's good for about 14%. We're far away from October 30th, but I said in this session, we were going to compare some seasonal data to some of the current data. Well, remember, what seasonal data does is it looks at historical information over a certain period of time, and what we do here at VantagePoint is we use that historical information to say, okay, if we take all 13 of those years and we combine them, what is the expectation? Well, it's primarily bullish for Broadcom year over year, and the strongest part of that bullish move, as I said, is October 30th, and it's good for about 14%. Nearly half of its annual move can happen starting in October. All right, good. You're probably not going to get a lot of that information in a lot of other places, but here at VantagePoint, we always try to provide something that you can use to be a better trader tomorrow than you were today. All right, Nvidia. Let's do the same kind of analysis on Nvidia. We've got several great moves on Nvidia. One of the latest moves happened recently. There was a great profit-taking opportunity, a great opportunity to get into a nice long trend starting the day after Christmas, and there was a really great move here. Right? And when we look at this great move that came up yesterday, it was good for about 8.73%, right? And I know a lot of people are going to say is like, yeah, Daniel, but look at Nvidia today, right? It lost 6% of that. Well, when I take 8.73% and I subtract 6.5%, it's still a gain, right? And let me show you how we use the artificial intelligence in VantagePoint to navigate those situations so that everybody understands it's just not about taking profits. It's also about locking in and preserving capital. So I'm going to zoom in here to just the most recent information that I've got. Let me just go, let's go 2 weeks. There we go. Here's the move of the last 2 weeks. Where's my pen? I lost my pen. Yep, I did lose my pen. Let's see if I can get my pen back here. Sorry about that. There it is. All All right, so here's the crossover. You can see that crossover here. You can see where that trend was moving higher, very clear. But let's say you took that opportunity. I didn't have total confirmation at VantagePoint, but let's say you took that opportunity when you had the total confirmation, right? You got the total confirmation here. You grab that move to the upside, and let's say you're using the VantagePoint software the way we train, and that is if the area is green and the blue line is above, check the neural index. If the neural index does not agree, then don't make a decision until it does. No confirmation, no confirmation, no confirmation. All right, the neural index and the momentum said, okay, all right. Now we've got enough agreement in the predictive indicators to say that there's some bullishness expected. The earliest I could grab that move is right here at the open of that day. Again, from the open of that day, let's go from the very open of this day, roughly, to the close of yesterday. What kind of move is that in 1 or 2 trading days? 6.76%, right? Now, I've got my predicted high and low on the right-hand side of the chart. Look, here's my predicted high right here. Here's my predicted low for today's trading, saying we're expecting more bearishness in the overall range of the day on Nvidia. Well, again, one of those situations where it's like I'm a believer in Nvidia. I want Nvidia to go from a swing trading standpoint. I got in it right here. I've got my stop loss somewhere here, either at a minimum at my entry point, or I've got a stop loss just below that predicted low. And this is what we teach at VantagePoint. If you've got information about the next trade day, VantagePoint is predicting here a potential low of 147.06. Well, I can set my stop loss below that, call it 145, let's say. I'm not going to set it right at 147.06 because VantagePoint, the AI, is saying you can expect Nvidia to go that low. So I set it below that depending on your trade plan. If the market moves unexpectedly, as Nvidia did today, and you get stopped out, well, now your 6.76% gain turns to a 3.46% gain, and you're out of that move. Let's go back to the chat box. If you use predictive information to lock in some gains at 3.46% in 1.5, 2 trading days, is that a valuable piece of information, a valuable piece of analysis? And I know what my answer is. The question is, when you see AI not only protect your capital, but also find opportunities at the right time, in the right place, in the right stock, could that make 2025 your best year ever? My answer to that is absolutely, yeah, agree, totally, in my opinion. What's your opinion? Let me know in the chat box. You know, if you can't tell, I get very excited about what VantagePoint can do for you, and I get very happy to share this information with you. But I do love some interaction. You know, I'm sitting here in an office by myself talking to a camera, so anything you can do to jump into the chat box and get involved, I am here for it, all right? Matter of fact, I'm going to send you guys a little heart, right? There you go, Akina. I used it to get out today. Well, there you go. There you go. So real life scenario from a real life user in the chat box. Thank you for popping that information in. There we go. Peter and Edward says yes. M says yes. Good. We're on the same page then. Now, Nvidia. 19 years of data on the Nvidia information that I have in the VantagePoint software. There's approximately about a 35% move year over year through that 19 years of data. Think about that. 19 years of data, about a 35, 36% move. Over 19, almost 20% of that starts on October 26th. So again, another date you can put into your notebook. It's far away. We're talking 10 months away. There's a lot of opportunity throughout the entire year. But if we're talking about the strongest seasonal move based on the 19 years of data that I have access to, October 26th is the date that rings strong for me. Does that mean I shouldn't trade it until October 26th? Well, that's your call. But from my perspective, from an educational standpoint, it just means if I'm looking to increase my odds with a strong seasonal move, that's the time that I'm looking to increase my odds. That doesn't mean that there's not an opportunity to make a ton of money throughout the entire year. But we're talking about stocks, trading stocks being an odds play. Well, that seasonal data becomes another level of analysis that I can use to increase my chances. And hopefully that is information that you can use to your advantage, right? All right, good. I think we're getting somewhere. I think this is good stuff, and I think you're enjoying it. And if you're not, let me know. But I feel like this is exactly the kind of analysis that you're probably looking for day in and day out. Here's Palantir Technologies, PLTR. This is probably the second most requested stock analysis that I've gotten lately in the last, call it, month or two. Now, Palantir does not have a whole lot of seasonal data. We're talking about just a couple of years. I'm still going to give you the seasonal information, but just understand, you want at least 3 to 5 years of seasonal data for it to have some good seasonal relevance. But we'll get there. We'll get there. Here's a crossover. We see the crossover happen on this day. This is November 5th. November 5th, I've got a blue line crossing above. I got the neural index green, and I got the predictive differences pointed higher. So what I'm saying is, let me just take you through my thought process here. The blue line crossed above, I can see it on this day. The crossover happens between this day and this day, so the first chance I can see it is on 11/5. The first thing I do is I look down and I say, where's the neural index? Is it green or red? If it's green, I've got a trend prediction up. I've got a strength prediction bullish. And then I just read my momentum indicators leading into that day. To use a stop sign in the car analogy, is my car picking up speed or is my car losing speed looking forward? And I can see that it is picking up some momentum over the next 1 to 3 days, which means, as somebody interested in making money, don't really care the name of the stock personally. It could be Plato, it could be whatever. I care about making money and preserving capital. Well, that's the point at which VantagePoint said, yes, over the next few days we can expect an uptrend. The question is, did you get an uptrend over the next few days? Absolutely. Going through that trend, as long as that blue line stays above, I can continue riding that until I get a cross to the downside with confirmation from the neural index. Well, there's a cross to the downside. There's confirmation from the neural index, whether it's this day or this day. I don't care what day you use. You're going to come up with the same conclusion. There is a cross to the downside, and that trend was expected to start going down here on December 31st. All right? That's what the AI said, at least. The AI said, look, December 31st is the date that there's an opportunity to lock in some gains. If you had used VantagePoint exactly the way that we teach right from the beginning, and I just go from crossover to crossover, from the open to the open, that's a 42% gain in 39 trading days, 200 shares, approximately 4,500 in hypothetical gains, on top of the different gains that we've had so far. What was Broadcom? I don't even remember. It was 42% as well, 3% on Nvidia and Palantir, another 42%. But more importantly, there is a profit-taking indication right there. I don't have to be concerned with what's happening right now unless I like to buy puts, sell calls, or short the market. If I do that, let's zoom in again. I'm going to do the same thing and just zoom into a more recent chart here. Let's go 3 weeks. There we go. Cross to the downside. Neural index agrees. You can see it. Predictive differences pointing lower. I don't have to overanalyze it. I don't have to overthink it. I can look at it and say, wait a second. There's some bearishness going on here. And if I'm swing trading Palantir, then I know I've got a profit-taking opportunity. And if I like to short the market, there is a potential short on the horizon based on what we saw in Palantir at the beginning of the year, right? So let's see. Here's the open, right, of the next trade day. 1-3, 1-2 was the day we clearly see all the crossover. Here's the open on that trade day. We get bearishness the very next day. Now 3 days out into the future, right now Palantir is at 69.99. So if we take the information that we got on this day and we go to 69.99, and let me see if I can just put it in here, properties, and I can put this right on 69, I almost hit it, 69.99, and hit apply. So if you like to short the market, then there's VantagePoint gave you a great indication of a downtrend. 200 shares could have produced about $1,100 in potential gains here. Not too shabby if you ask me for two trends, the last two trends on Palantir, with the most recent one being a bearish one. So those of you that are out there holding Palantir saying, this thing's going to go, you got hurt today. If you're a VantagePoint user, you didn't have to get hurt today. VantagePoint indicated on the first day of the year that there was some bearishness expected in PLTR and profits could have been taken. and loss mitigation maneuvers could have been had. If you miss it, I'm sorry you missed it, but you can see the software was very clear on those expectations. Now, we've got a lot of people here that are interested in, holding Palantir long term and saying, you know what, I'm an investor in Palantir. Okay, let's put the triple cross on and see if the triple cross agrees with the fact that there is still some bullishness left. And you can see how strong, look, I want to show you guys something. Look how strong this navy blue thick line is. Price couldn't break it. Price couldn't break it. Price couldn't break it. Price tried to break it but couldn't stay below. Price tried to break it but couldn't stay below. Price tried to break it but could never get below that blue line until today. So from an investor standpoint, up to this point, you're thinking, okay, I'm still investing. Different than swing trading, right? As an investor, you're expecting a little bit more drawdown because you're looking at the long-term opportunity here. But still, VantagePoint can give you some edge by understanding, well, prices are now officially below that triple cross long, that thick blue line, which is called the triple cross long, and you got to think about locking in any gains. You can always come back to it as an investor. You don't have to experience a ton of drawdown when you're using the artificial intelligence. Again, that's my opinion, but at the end of the day, I've been utilizing this artificial intelligence now for almost 14 years. So the detail here is that you can apply this to your trade style depending on how you like to trade, swing trade, invest, position trade. Heck, even day traders love this technology. All right, so as I said, Palantir only has a couple of years of data, so understand that. But 63% move in the last couple of years is the expected bullishness of Palantir year over year. And the strongest move, you can get all 63% in that year by grabbing it on 5/16, according to the seasonal data. Caveat, asterisk, star, this is only 2 years of seasonal data. So for me, it doesn't have that much relevance. I'm looking for 3 to 5 years or more. If I can get 7, that's even better. So 2 years doesn't put a real feather in its cap for seasonal for me on Palantir. So for me, this is more of a trader's market. After all, 2025 is expected to be the year of the trader. So why not take advantage of some of these swings, right? Good. Steve says a Kramer effect. It could be. It could be. It's a lot. There's a lot of jokes around that. I've heard a lot of people say that when Kramer starts recommending it, start selling it just because that's how it moves. But everybody has their opinion. All right, let's take a look at Apple now. Again, one of the most popular stocks historically. People are always asking about Apple, and rightfully so, right? From a company standpoint, they're the kind of company that you can make a lot of money with. VantagePoint had a very clear bullish trend expectation starting on 11/12. The Neural Index agreed. I'm on the left-hand side of the chart, folks. There you go. You see it, trend up. Blue line stayed above all the way until the crossover right here. So this is the crossover, 12/31. Now, I want to point out something. Remember that little hack that we talked about that helps you read predicted momentum in a way to help you understand when momentum is peeling off? Look, here's the high, and here is the high. As I connect those, I had momentum peeling off for quite some time, right? Same thing here. Here is a high. I'm just connecting these highs so that you can see it. Here's a high. Here's a high. Those lines are pointed down. Here's a high. Here's a high. This line is pointed slightly sideways. I would call that sideways, maybe a little bit of bullish. So I already had momentum peeling off from a predicted standpoint starting when we got that second high right here. So on this day, right here on November 27th, when I see that little point make a new high, I've got bearishness already in mind. The crossover is going to tell me officially when that trend is expected to reverse. And look at the screen, folks. That's what the artificial intelligence indicated, crossover to crossover. Simply using the artificial intelligence the way it was built, the way it was intended as 11% move. We were looking at, 200 shares of most of these stocks. I'm going to put 200 shares in here, and that's about a $5,000 hypothetical gain right there in just, 34 trading days, okay? Not a bad situation to be in if you ask me, right? $100 or more a day, that's pretty darn good. Let's keep on talking about Apple, though. Let's zoom in on Apple a little bit here and just take a look at what's recently and what's currently expected for Apple. On 12/31, VantagePoint indicated bearishness. The Neural Index agreed it was red. Momentum had been peeling off, and we've got a clear indication of momentum saying bearishness 12/31. ended the year with Apple indicating bearishness, right? Apple is currently, where we got to close at 242.21, so call it 242.21. It seems to me like that bearishness was clearly identified and has played through up to today, producing to the downside gains of about 2.5%. So think about this. If you're still holding Apple because you're not using the predictive indicators in VantagePoint, then you've peeled off from 11%, you're down to 9% gain. You're never going to lose money taking a profit, but would it be better to have that 11% versus 11% plus 2.5% versus 9%? Yes. But is 9% still a winner? Absolutely. And do you know why that's the case? Because of the early entry, folks. The artificial intelligence identified an early entry. So even if you ended up riding this trend and you're still in this trend to the close of today, because you got in so early and you got that early indication of the bullishness, you still have a substantial profit in that trend. You just got to ask yourself, am I willing to go against what the artificial intelligence is saying and potentially take some more drawdown, or is 8% gain enough? That's up to you and your trade plan. All right, so Apple, I've got 19 years of data on Apple, and year over year, we got about a 30% move, 30% gain using that analysis, 19, 20 years analysis. And Apple, the strongest move in Apple is about 11.5% according to my notes, and it usually kicks off around July 5th. July 5th is the day that you see the strongest seasonal move in Apple of over 11%. So a good opportunity there to put that in your notebook and use that for future opportunities on Apple. All right. All right. Plug Power. Another one that I get a lot of questions about. Plug Power had a really, really great move just recently identified right here. Plug Power had a bullish crossover to start the year, right at the beginning of the year. This one-day move on Plug produced handsomely, right? From the open to the close just on one day. You guys can do the math. You can go look at it. That's almost 10% right there. For some of you, that might have hit your target right there, right? This thing was $2 and let me see what it was forecasted to go up. It was $2.63. $2.63. Well, if you take a second and go look at where it is today, it had a nice big gap up. It started up and then it pulled back and it closed at $2.95. So if we go from there to $2.95, we've got a 1.8% gain, right? On a stock that was, what, $2, $2.50. So no matter how do you slice it, if you got stopped out at today's position, which you wouldn't have, look what VantagePoint predicted for the low. Look, VantagePoint predicted for the low. At 6:30 last night, you could see a low on Plug Power of $2.92. And you could see a high on Plug Power of $3.31. The high today was $3.32 and the low was $2.94. Guys, that is 1 penny off of the high and 2 pennies off of the low. And that was predicted last night at 6:30 p.m. Eastern Time. For you users out there, your VantagePoint family members, you know how accurate that predicted high and low is. Don't expect it to be on the penny by any means. But if you could get that close on a consistent basis, I think you could find that this year could be a really, really great year for you, right? No matter how you slice it. All right, I got 19 years of data on Plug Power, a 20% move expected annually based on the seasonal data. 5.8, sorry, I said a 20% move. Let me back up. Let me correct that. Plug Power is one of those few stocks that loses money annually, and it's got a negative 20% move. It's not one of those where from a seasonal standpoint, you're looking to be a long-term investor, in my opinion. You're looking to swing trade and grab this, and if you are, 5.8% of that move can happen right now. The majority of the Plug Power positive move happens from December 31st to January 13th. We are in the midst of it. Right? We are in the midst of it as we speak for the next week or so. So take that as you will, but that is based on 19 years of data on Plug Power. All right, Tesla. As you can see, I'm trying to click through. I've got 1, 2, 3, 4 more charts to really dig into from this standpoint. By the way, that's Tesla, Meta, Amazon, Netflix. Is anybody interested in doing this analysis on those 4 charts? And do you want the seasonal dates that I'm talking about and the seasonal performance I'm talking about on those 4 more? Because if you do, go to the chat and let me know that you want that personally. It would feel good to know that this is good information you're looking for. But from a time-wise standpoint, I want to make sure I'm not wasting your time. So do me a favor, get involved in the chat. It's been quiet here for a minute, but if this is good information that you can use and you want to get it on Tesla, Meta, Amazon, and Netflix, then give me a quick yes in the chat so that I can continue this. And then if you've got a ticker or something that you're interested in doing some analysis on the VantagePoint software, you could pop that in the chat as well. And if we've got time at the end, we can certainly dig into a ticker or two. All right, good. Good. Thank you, Terry, Peter, Anil Kumar. Thank you very much. Barry, okay, good, good. Just so everybody knows, this information is from an educational standpoint. I'm not providing trading advice. From a date standpoint, I'm using seasonal data that we've compiled here at the VantagePoint software. All right, let's take a look. We've got a bullishness on Tesla right here, 1024. The blue line came down and touched that gray line, but the neural index said, no, not yet. And then it came down and touched again, not yet. And then we got a clear cross right here on 1227 to end the year. So if we ride that trend, crossover to crossover from the open to the open, let me go to the open of this day to the open of that day. There we go. What do we get? 65%. 65%. We're going to pop in 200 shares again. Substantial move. I'm just using 200 as a round lot, a round figure. 33,000 in potential gains. So far, folks, of the stocks that I've been asked about the most, VantagePoint has been lights out, as you can see. And even now, VantagePoint indicated bearishness on Tesla starting on this day. I'm going to put my cursor on this day. The blue line crossed below. The neural index was red. The predictive differences were pointed down going into that day. I don't have to overthink it. We're expecting bearishness on Tesla. It's clear as day on the chart. Tesla unfortunately lost about 4% today and closed at 394. I say unfortunate for you investors, for you swing traders, to get Tesla at 394. VantagePoint predicted a low of potentially 400, so it fell below that. To get Tesla to the bearish side, taking it down to around 394, just ballpark it here. You got a bullish trend that produced 65% and a bearish trend that produced over 5%. That's 70% gain in 2 trends, just the last 2 trends based on the artificial intelligence forecast. The key here is you can buy long if that's part of your strategy. You can buy short or buy puts or write covered calls if that's part of your strategy based on what the artificial intelligence is saying. And the indicators I'm showing you on the screen, right out of the box. Every VantagePoint family member has them, should be using them, and should be looking at them, in my opinion, because they are that good, as you can tell. I got 12 years of data on Tesla, and of that 12 years of seasonal data, you're expecting about a 50% move from the beginning of the year to the end of the year based on compiling all 12 of those years together. It doesn't guarantee, it just means that 50% of that 50% move from the beginning of the year to the end of the year based on that data. And guess what? 22% of that comes May 25th. Not on that day, but that's the beginning of the strongest trend in Tesla based on that seasonal data. So that's a date I like to have in my calendar, that's for sure. But there's certainly an opportunity here where you can really see VantagePoint indicates the bullishness, the bearishness ahead of time to give you that edge that you're looking for to make this a great year. All right. All right. Meta platforms. I've got several trends we can highlight here instead of going trend over trend, because you can see there's a really great winner here. There's another great winner here to the downside. Nothing crazy, but certainly a winner to the bear side. And then we got a fresh crossover. Well, I say nothing crazy, but look at these hypothetical gains here. 200 shares and 200 shares. Just to use a round number. Maybe you only do 1 contract. Maybe you only buy 10 shares. I'll leave that up to you. 100 shares, 100. No matter how I slice it, you can see how the VantagePoint family members that start out investing in VantagePoint for a few $1,000 can potentially recoup that very, very quickly. No doubt about it. No guarantees there, but you can see how it can happen based on this analysis. So when we look at the latest move, January 3rd. VantagePoint said on January 3rd that there's a potential bullish opportunity, a bullish opportunity in Meta, right? The neural index agreed, predictive differences, and the momentum we're pushing higher. I don't see any reason to disagree with the artificial intelligence. It's more powerful than I am. It's looking at more data. For those of you that don't have this, let me just a little aside. For those of you that don't have this information, let me show you the data that this is actually looking at. In order to generate the predictions for Meta, it's looking at the euro, it's looking at Seagate, Coca-Cola, gold, soybeans, right? Who would think soybeans and Meta would have any connection? I don't care why there's a connection. What I care about is the artificial intelligence figured out all of these things can influence the price of Meta platforms. They could push it up, they could push it sideways, they could pull it down. All of these markets are weighted by degree of impact, which is why I don't care about what the artificial intelligence says compared to what I think. I just care about what the AI says because what I think is not nearly that powerful. So we got a nice bullish move. In one day, we got a really strong move in Meta. And then today, what happened? It pulled back. Meta closed today at 617.89 roughly, right? 617, right in that range, right there. A just under 1% gain in one trading day. We'll do the math. A percent a day, 5 trading days a week, that's 5% a week, right? 20% a month. It'd be great if it went linearly like that. It doesn't, but still, 1% gain, whether you lock that in as profit or not, or you continue riding that trend, that early identification of that bullish opportunity is what helped you take advantage of a bullish move that even after today's volatility, still a profitable opportunity. Right now, VantagePoint is indicating there's some more bullishness left in Tesla. If I go to the triple cross, in Meta, if I go to the triple cross, you can see from an investment standpoint, I have prices closing above the triple cross 1 day, 2 days, 3 days, and even with the pullback today, I think, where do we close today? We closed at 617.89. That's 4 consecutive closes above that triple cross long level, telling me I have permission, and I like to say it this way, and for those of you that use the AI, you know, I have permission from the artificial intelligence to be perfectly happy about being bullish related to Meta, all right? Now I've got 10 years of data on Meta. Based on that 10 years of data, got over 25% positive move, with 16% of that move happening starting April 12th on Meta. So there's still some opportunity throughout the year, but the strongest move to the tune of 16% based on those 10 years of data is the April 12th? April 25th date, all right? All right, Amazon, here we go. We've got several moves on Amazon that have produced pretty well. You know, at this point, I think you understand just by looking at the chart what these indicators are telling me and what I'm seeing from an indicator standpoint. There's a nice profitable move, 6.78%. There's a nice profitable move, right? We can look at this and see another 8.5%. Let's look at this move right in the middle. We got a cross to the downside. Things said bearish, things went bearishly, and then we got a reversal. Call this a loser. Nothing is perfect. If I put the loser up on the top, the winner's up on the top and the loser at the bottom, let's do some quick math and say through these 3 trends in the middle, you're up 6.5% roughly, 8.5%. That's 15% to the positive, 3% to the negative. That shakes out over 3 moves to be a 12% winner, right? Did I math that right? Hopefully. A 12% winner so far from Amazon going into the last move here at the end. From a last move standpoint, we got a cross to the downside. If we go crossover to crossover again, we can count this as a loser. That's 50% win rate with a loss of 4% and a gain of 15%. That is 3-1 from a profit standpoint. Pretty good odds, even when you've got losers on the screen. As you can tell, I'm transparent. Not everything is a winner. Otherwise, it wouldn't be called trading. It'd be called winning, right? That's what I always tell my friends when we go fishing. It's called fishing. It's not catching. Some days you catch, some days you don't, but either way, you're fishing. In this case, we've got 50% winners, 50% losers on Amazon with a win rate or a profit of 11-12%. Now, let's look at the latest forecast. VantagePoint last night at 6:30 said Amazon had some bullishness in that trend, right? Amazon had some bullishness in that trend. We're looking for an open somewhere between that predicted middle point and that low. If we can get an open just south of 227, then that is a great opportunity to go long. I'm always looking, and this is for the detail of you users, VantagePoint family members that have this. This isn't just a buy and go. VantagePoint is saying bullishness expected, bullishness expected, bullishness expected. How do I execute an entry? And this is something I get requested all the time. Well, I execute an entry by splitting that predicted high and low, right? I see the midpoint. The midpoint is 227.93. The low is 225.93. If I split that, I'm looking for an entry around 226. I want something on the bottom portion of that predicted high. If I get an open, the bottom portion of that predicted high and low, then I know I'm all clear for an entry. If I got that, I don't even know where it opened. Where did it open? 227.90. I didn't get that 226 number, so that's not a position opportunity that I'm looking at or getting entry or getting filled on, right? It's about being smart, applying this to a trade plan. My trade plan says, I want an entry somewhere in the bottom half of that candle. Not at the middle, not at the top, not above the top. I want something from the bottom half of that candle down for a potential entry. It'd be great if it's ideal at 25% mark, 226. That's perfect world. If I get an open at 226, great. I can go long Amazon. Otherwise, I sit on my hands. I figure out something else to do with my time because I don't have the right setup for an entry, right? You've got to have the right information to know what to do from a trending standpoint, but then for execution, you got to know how to apply it from a trade plan standpoint, and that's one of the hints that for you VantagePoint family members, I don't want you to forget. Yes, thank you for the reminder, team. If this is information that you're looking at, interested in, but you've got questions, because I'm running out of time, got about 7 minutes. If you got questions that I didn't get a chance to get to, go to VantagePointForecast.com. That's www.VantagePointForecast.com. We can get your questions answered, or if you want to give us a call, call us, 1-800-732-5407. That's the best way to get your individual question answered and talk with an artificial intelligence expert like myself here at VantagePoint. All right, Amazon, 19 years of data, 25% year over year. Using that seasonal data, 16% of that 25% move starts March 28th. March 28th for Amazon. So we're looking for, look, one note about seasonal. Let me make you one note about seasonal. Number one, it's not perfect. Number two, it's not the only kind of analysis you want to do. Number three, it should be part of a multi-pronged approach to making a trade decision. Personally, I use intermarket analysis and VantagePoint. I like to use seasonal analysis. I like to use momentum analysis, right? I like to use volume and reversion to the mean analysis. I like to use these different kinds of analyses, if you will, that are non-redundant so that I can be convinced that it's a good opportunity for an entry. I call that the AI sentiment. When your AI sentiment is bullish and it's strong, then I can make a decision that stacks the odds in my favor. When my AI sentiment is bearish or consolidated, I can make a decision based on my trade plan for those kinds of market conditions. All right, good. Let me see, I got a question from Carla. Did you say that we want to get in below the half point of the expected move? I always thought we wanted to wait until the breakout above. Carla, I'm not sure if you're a VantagePoint user, but if you're a VantagePoint user, you want to maximize your entry. Because you get that predicted high and predicted low every day, if you're looking for a new bullish entry, is it behoove you to get in at the top part of that predicted high and low or near the bottom part? Do you make the most money in that day if you catch it near the top part or the bottom part? So Carla, my answer to your question is, I'm looking to maximize that day, which means if I'm looking for a bullish opportunity, I'm looking for an entry on the bottom part of that predicted candle, okay? Because I'm using predictive information, the AI is giving me that edge. That's how I apply it from a trade plan standpoint. Thank you for that clarification. Now, if you're not using AI, a lot of times people train, wait for the breakout, wait for it to go so that you can ride that momentum. Sure, you can do that. but then you're using lagging information to make your trade decision. And in this case, I'm using predictive information. So it's an adjustment from that standpoint. All right. So thank you for that question. Rodney, I don't know that I'll be able to get into the stock scan feature today. We did that in our VantagePoint University for the VantagePoint users today. We did some of that, but I with 4 minutes left now, I don't think I'll be able to. Here's Netflix, right? Here's Netflix. And I might have saved the best for last. And the reason I say that is because this trend in Netflix produced very, very well for the VantagePoint users, right? You can see a 17% gain, and then you can see a move to the downside. Just going in the middle of that candle here, you can see that that's a 2.6% move. So you're talking about 20, it's rounding up, 20% gain in two trends on Netflix. 500 shares may be a lot for some people. 2 contracts, 200 shares. We'll just pop that back and see that no matter how you slice it, hypothetical gains from what the artificial intelligence forecasted, astronomical, fantastic gains. You may call these home runs when you're talking about 30, 35% gains in 2 trends. But what does it say about what's going on right now based on the artificial intelligence, right? That's the question everybody wants to know. Well, what VantagePoint is indicating, let me just move some of the stuff out of the way here. Bearishness. And why I say bearishness is because the blue line is below the gray line, and that shaded area has been red for a week and a half, 2 weeks. If we go back to the crossover, bearishness, the predicted high expected to be lower, the predicted low expected to be lower. Neural index has been red for 5-6 days. The predictive differences predicting the momentum are creating lower highs. Is anybody looking at this analysis and saying, I'm expecting bullishness? Right? It's one of those rhetorical questions. You don't actually have to. I'd love for you to answer it. But would you really look at this AI and say, with an 87.4% accuracy, everything is saying bearish that I think Netflix is going to go up today? No, you wouldn't. I wouldn't. I don't think anybody would by seeing this kind of analysis. So you can see there's an opportunity to be more successful to the downside using this predictive information, right? For you investors, let's take a look at the triple cross. Does the triple cross give us permission to be bullish? No. Look, prices were above, stayed above, and now prices are staying below, which means the AI in the triple cross is saying, I don't have permission from the AI to be bullish. The AI is giving me permission to be bearish. And if you go look at what Netflix did today, no question about it, it went down to $2.60 and closed at $8.79. Where's $8.79? Dead center of that predicted high and predicted low. The low today was $8.69 and the high was $8.88. Folks, do me a favor. What did VantagePoint say you could expect for a high on Netflix today? $887.99. That is 1 point off. And the low was expected to be $870.32. That's 35 cents off. Ain't too shabby if you ask me, but nonetheless, bearishness expected on Netflix at least until January 18th. And here's why I say that. Using 19 years of data, Netflix has about a 36% positive move annually, and 11.88% of that starts on January 18th. That's 11 days away. Again, not providing trading advice here, but from an educational standpoint, using 19, 20 years of data, that is the date that comes across my desk as a strong buy date for Netflix producing over 11% gains. Hopefully that's valuable information that you can use. Looks like from a time standpoint, I try to keep this to an hour, so we might have just run out of time, but let me see if I can pop in some analysis here on Dell and Yum, and at least we've got some of that stuff that we can take a look at really quickly from an AI. I don't have time to get into the seasonal, but let's take a look. Uber. All right, so we got bullishness on Dell. You can see that, a fresh crossover right here. Momentum is building bullishly. We have, from a long-term triple cross standpoint, permission to be bullish as of yesterday's close. There was a little bit of pullback in Dell today. We got an inside bar, predicted inside bar, saying there is some indecision, so this bullishness may not be long-lived. But nonetheless, all in all, right now, as VantagePoint is saying that there is potential bullishness on the horizon for Dell. That's for you, Terry. Yum, let's pull up Yum and take a look. You pop that into the chat. Anil Kumar, let me pull it up. Here is Yum Brands. We'll do the same quick analysis and see what Yum Brands has to say. This does not look good. got bearishness on the short term. We've got bearishness from the triple cross for quite some time. I would have expected Yum bottom to fall out based on what I'm seeing today. VantagePoint was expecting bearishness. I would no doubt that we got bearishness and still expecting a bearishness on the horizon. Oh boy, this thing lost $1.62 today. It closed at 128.30. VantagePoint predicted a low today of 129.12. I mean, that's money in the bank, especially when things are falling off a cliff like this. This is not a good scenario if you're an investor or you're buying long Yum. Yum is expected to be more bearish based on what the artificial intelligence is saying. All right. All right. I think I hit a couple of those. I'm just looking to see what else we got. Uber, Mojo wants to see Uber, and then we're going to call it there. So last one, Uber Technologies. And I'm just running through the indicators that I have right out of the box with VantagePoint. We got bullishness on Uber. We got momentum building bullishly. We got the neural index indicating bullishly. We do have a lower predicted high and a lower predicted low. So there could be a slight pullback today based on what we were seeing at 6:30 last night. Uber closed today at 66.15, so we did certainly get a little bit of pullback. VantagePoint said we could expect a low of 65.90. The low today on Uber was 65.95, so off a nickel. Thank you very much, VantagePoint. That could have protected your downside. At least this way, you know that it didn't trade lower than what VantagePoint expected today. It traded a little bit higher because it opened higher, right? Which just means that you're wrong to the right side. But at the end of the day, from the beginning of this crossover, when we see the crossover bullish to now and where it is right now, or where it closed, is up about 3.5%. And VantagePoint is expecting some more bullishness on the horizon, with the triple cross indicating that we've got 4 confirmed closes above the T-cross long, saying the AI is giving me permission for bullishness. Question on the table: how long do you wait? Do you wait on an entry point? If you're asking me, I'm looking for the open the next day. If I'm looking for a long entry point between that predicted midpoint, which is right up here in the corner of the screen. So this would have been on this day, yesterday, you would have been looking for an entry based off of something lower than that predicted midpoint. Every day you get the predicted midpoint here. So I want something lower than 66.50 to take a long opportunity the next day. I'm not waiting longer than that. Otherwise, me having predictions of 1 to 3 days in advance gets washed out if I wait. Right? So there's opportunities if you're applying the technology to a trade plan that is consistent. You don't make it up on the fly. You document it. You trade that plan. You assess the results. Then you make adjustments. I don't assess on the fly. It's about using the information in a way that can be systematic so that you can increase the chances that you're successful more often. Again, not trading advice, but worked with a lot of traders over the decades. I've worked with a lot of professionals. I've learned from a lot of professionals, and this is the strategy that I like to apply from a market analysis standpoint. That's it for me. I went over on time. Hopefully it was valuable. I really enjoyed doing this for you. I know from a VantagePoint artificial intelligence standpoint, we're looking for 2025 to be a great year for you, to be a great year for our VantagePoint family members, and I can tell you, we're not going to stop until it is. So again, thank you for your time today. Thank you for being part of the VantagePoint family if you are, and for the rest of you, thank you for letting me give you the view from my vantage point. Everybody have a great day, and good luck this year.